Listen, here's the reason why the strategy will always work, okay? No matter what year it is, whether it's the 1900s or the 2000s, this strategy is timeless and universal across all markets and all the different securities. Just like how birds fly by flapping their wings, stocks move by trending up or down and then pausing and then resuming the previous trend. As long as the stock is trading up or down and not just going sideways for the whole day, which is pretty rare, you can count on finding these continuation pattern strategies every single day. Don't believe me? In this video, I'll be going over trades that you could have taken every single day of the week using these continuation pattern strategies, or also what I call the go, pause, go strategy. When the stock goes either to the upside or the downside, the key is to find when it's going to pause and to find your optimal entry so that you can get the subsequent move that takes place after that. With these pause patterns, you can look for two shapes, either a rectangle or a triangle. Make sure to keep this in mind. And without wasting any of your precious time, let's get straight into the video. Like I mentioned before, stocks that are moving pretty much move in one way, and that's when it goes, it pauses or retests, and then goes again. So let's start off with Monday, right? So what you want to do is look for these pauses where you can get in for a good entry and take your exits on the next move, either to the downside or the upside, right? So let's take a look at the S&P 500 on Monday. Okay, so you can see in the pre-market that, it holds this support level and it's going up, right? And then in the first 20 to 30, is that 20 to 40 minutes, it kind of consolidates and pauses, right? This is the pause we're looking for. Now, this stock could either resume going to the upside or it can reverse and go to the downside, right? Now, granted, this is a 5-minute chart, so what you want to have also is a 2-minute chart right next to you, so you could look at the granular candles, that either breaks out of the trend line for the upside or the downside, okay? So with this stock, as soon as it breaks this trend line or this trend line right here, as soon as the stock breaks out of this pause, you can get in either for the downside or the upside. And what did I tell you about the two shapes, right? Every single pause is either a triangle or a rectangle. So in this case, what is this? It's a reverse bear flag, right? Whatever name you want to call it, it's a flag either that's bullish or bearish. In this case, it breaks out of this flag, out of this triangle, and it gives us a move down, right? For another, $2-3 more. So you can get in right here, set your stop loss right here, get in as soon as this trend line breaks, set the stop loss, and take some partial exits at the support or the first move, and then ride out your runners, right? So that's the S&P 500 SPY on Monday. Let's take a look at Nvidia. This is why I want you to have a 2 and a 5-minute chart, because if you take a look right here, at the first 15 minutes or so, you want to wait at the market. You want to wait for the market to just recalibrate, right? That's what the first 15 minutes of waiting is for, just for you to observe and assess the market and what it wants to do, right? So once Nvidia reclaims this support level and moves to the upside, you don't get in right when it starts going up, right? You look for the pause. And so in this case, what does this give us, right? It gives us a rectangular pause, right? You can see that it paused for a little bit, for about 2 to 8 minutes. Plenty of time for you to get in and build your position around 896. Set your stop loss right here at the bottom of the rectangle, and on the next move up, take your exits, right? Pretty self-explanatory. And then afterwards, it gives us a reversal, right? But on this reversal down, you don't want to just chase this, right? What if it's just a pullback, right? What you want to do is wait, and then what does it give us, right? A triangular pause, a triangular retest, a bear flag for a lower move down. So happens going up, going down every single day on a 5-minute, the 1 hour, whatever time frame you choose to look at. I'm a scalper, so I like looking at the 2 and the 5, and I trade options, so I have to be very technically vigilant, right? Because every couple dollars or so, every couple cents could really move the premium. So that was with Nvidia. Let's take a look at SMCI, right? Same thing. It gives us the same pause, this rectangular pause. So you could get in right here at around 917. Set your stop loss right here, And then, on the next subsequent moves, you take your exits and make yourself some money, right? And the same thing over here gives us a flag in which, it's a reverse flag. And, once it breaks this trend line, you could get in right here, set your stop loss at 925 above these candles, and, take your exits. So not much more to explain, just me showing you. I think this video is just going to be me showing you guys, that every single day these opportunities appear, and your job is to, assess the market clearly and accurately, and take the trade when it presents itself. So for Tesla on Tuesday, it kind of chops for, an hour or so, and then yeah, sure, you could take this, reverse, bear flag in which it breaks out this triangular consolidation. But for me, it's not really optimal, right? But you could take that, right? It's chopping, it's consolidating into one triangle at this point right here, and then either when it breaks out from this trend line or from this trend line, right, you can get in, and in this case it breaks to the upside, and you could have taken that, right? But I like to see something more cleaner, right? Usually I like to go with the presuming micro trend. So whether it's going up, if the stock has been going up, right, then I like to take the continuation pattern with the previous trend, right? So with the stock, you can see that gives us a nice bull flag right here, and in this case, it's more of a parallelogram than a rectangle, right? But you guys get the point, right? It's a pause, and it's a break of a trend line in which you get in for an entry, set your stop loss, and exit at the subsequent move, right? And so you could draw a triangle. You can, if you look at a stock after the market closes, you can see a bunch of times where there are certain patterns where you could have taken it, right? That's just one example, right? There's another example right here, right before it, right after it. There's another example. There's even the small pause right here. So there's always continuation patterns with the go, pause, go strategy. So, this just the example I want to show you that, it was the cleanest for me for this particular stock on this day. But, you can see that there's multiple times where there were certain pauses. And usually what I like to do is not, try to trade the reverse, breakout, but I like to go with the resuming trend. Thus calling it a continuation pattern strategy, right? Not a reversal. And so that's what Tesla on Tuesday. If you take a look at Nvidia, it's kind of choppy for the first 30 minutes or so. And then on the breakout of this, you can call this a rectangle or a square. On the breakout, you could get in for an entry with a tight stop loss, right at the trend line break, and go for the upside. It's not the most optimal, not the cleanest, obviously, but it is a strategy in which it paused, it kind of, consolidated. If you took a look at the pre-market, it was going up, pauses, and then makes another move up, right? And then for the next hour or two, it's consolidating and forming this triangle, right? This triangular consolidation. So once this breaks this trend line, you can get in right here for an entry, set your tight stop loss, as I've already, mentioned, or as I've already written down right here, and, take in your exits, right? If we take a look at SMCI, first 20 minutes or so gives us this triangular consolidation along the EMA. Get in for an entry right here, set your stop loss right here, and, take your exits right here. And then next hour or two, gives us two more, consolidation patterns, continuation patterns with the trend line break. Right at the break, you get in, set your stop loss, and take your exits, right? It's pretty simple. You're going with a presuming trend. On the breakout, you're getting in. Sure, you can anticipate the breakout, but you never know if it's going to be a reverse flag or a reverse triangle, right? Usually, more likely than not, it'll continue in the presuming trend before it. But, there are times when it reverses, and so I like to trade the breakouts. It's more confirmatory for me, gives me more confidence on the breakout rather than anticipating the presuming trend. And so that's what SMCI. Let's take a look at the opportunities on Wednesday. If we look at Tesla, gives us, consolidation the first 20 minutes or so, a rectangle one. Could have gotten in right here, then take your exits. For the next hour or so, gives us this rectangular or this, channel trend line for the next hour or two, and then on the breakout you could have gone in and gotten out right here for quick scalp. And then obviously when it comes back to your stop loss or break or your entry price, your break even price, you could get out, right? And so sometimes it's not as clean, right? Sometimes it's a bit more sideways, it's a bit more choppy. So this wouldn't have been the most optimal setup or the optimal trade, but sometimes this happens. And you would have still been profitable if you took if you took the proper exits, but sometimes it doesn't give you that big huge move you're looking for, right? So that's with Tesla. If we take a look at Nvidia, same thing, pretty self-explanatory, right? Gives us a couple pauses, triangular consolidations, in which goes down first 15-20 minutes, gives us a pause, goes more down, gives us a pause, breaks the trend line, and it just keeps doing that until 9:30 a.m. SMCI on Wednesday, same thing, goes up, gives us this huge reversal back down. You don't get in right at the reversal down. You wait for consolidation, you wait for the pause and the retest. So gives us this triangular pause, triangular retest. On the break of the trend line, you get in, take the exit on the first subsequent move, and leave some runners. And then you can see whether you took this entry at the break of the trend line here or the break of the trend line here, you still would have made money, right? And so this is just how stocks move. And yeah, this some stocks move cleaner than others. Some days it's cleaner than other days. But your job is just to take the trade. When a stock hits your stop loss or closes above your stop loss, you get out with discipline and without any hesitation, right? On Tesla on Thursday, it doesn't really give us anything clean for the first hour or two until it breaks this trend line right here. Then you could have gone in at the break of the trend line or the break of the support, for a nice move down. And for Friday today, man, a lot of FOMO involved. No question about that. But in the pre-market, and then the first 15 minutes gives us this nice, trend line break. You could have gotten in there. I didn't. A bit too early for my liking. And then what does it do, right? It gives us this nice bear flag, this triangular break of the trend line, in which I get in right here. And I take my exits on the subsequent moves. Made about 2K. Made us move all the way down here to my next support level, which, I should have left the runner. So that was my mistake. Something to always keep in mind. I could have made a lot more money if I just, held a couple runners. So you want to, look for these setups every day. You can see it gives us a triangular pause right here. This is more of a rectangular pause right here. So on all these pauses, you just want to get in, set your tight stop loss. If it breaks your stop loss, you get out, right? And so you're pretty much making these risk-free trades. For Nvidia, today on Friday, for the first 30 minutes to 40 minutes, gives us this consolidation. And then on the break of this trend line, you should get in and ride the move downward, right? Gives us a huge move down. So hopefully I've made my point. What you want to look for are these pauses in which you can get a entry with a tight stop loss. And it's pretty it's pretty picturesque, right? If you have two sets of eyes that God has given you, all you need to do is look at the stock and what it's doing, and have the discipline and emotional temperament to carry out the plan and execute properly, right? And so I'm profitable for the month using this strategy, profitable for the week. Hopefully, you've gained some sort of value or insight. Stocks, it's not rocket science. It's just a go, pause, go strategy, or a continuation pattern strategy with rectangles, parallelograms, and triangles. You can name it whatever you want, whether it's a bear flag or ascending triangle or descending wedge or whatever you want to call it. It is what it is. It goes, it pauses, and it goes. Or it goes, it retests the level or retests the trend line, and it goes again. So that ends today's video. It was just a simple recap of some trades you could have taken every single day of this week using the continuation pattern strategy, or also what I like to call the go, pause, go strategy. This is the main strategy that I like to trade, and so I just wanted to share that with you guys. It's pretty much my bread and butter, and I'm profitable this week and this entire month because of it. If you appreciate the value, make sure to hit the like and sub button, and let's get your boy to 1,000 subs. Let me know what kind of videos you like, whether you like those simple recap videos or if you like the in-depth ones where I combine all the different technical tools and combine areas of confluence to take a trade. I'm wishing you many more Benjis, and I'll see you in the next video.